Good Wednesday morning, Market Chameleons, and everyone join us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamanik. How you doing, D? Happy
Good.
Valentine's Day, buddy.
Oh, happy Valentine's Day. Thank you. Do you remember to get flowers?
I did.
Okay, very
Dozen
good.
roses and cards for the kids. Uh,
Oh, very
yeah.
good. And chocolates.
You got my card in the mail?
Not yet.
Love you, brother.
Thank
All right,
you.
you want to start with
Thank
the
you.
disclaimer?
Love you too. Yep. All right. Good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for. There's the disclaimer.
Excellent. Great webinar yesterday, dude. That was
Oh yeah,
awesome.
thank you. Thank you. Yeah, it was a lot of good questions there. And I think maybe what we'll do, let me share my screen, by the way,
All right.
while you're doing that. And I think what we'll do is kind of continue on that new tool, maybe take questions, show some examples, discuss it a little bit more, but it was on the multi-leg options trades. Um, and if you are joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data or the analytics. If you do have a question, type it into the live chat on YouTube. Will's watching it. He'll read it back to me. And what we'll do for now is to give you guys a couple minutes to put in the questions. We'll take a look at the pre-market report to see if we could get insights, what's trading in pre-market hours. Then we'll move on to the questions. If we don't have any questions, I'll kind of navigate to the new tool and show you, how to use that tool, what the tool is doing. And, if we have questions, we'll answer questions about that tool. Okay.
Perfect.
So the so far we're on pre-market report, and this is a report that looks at just the pre-market trading. We have a calendar view here, and it does allow you to go back in history to dates to see how the pre-market activity was on a specific date. Up top, we showed the last weeks of data from a high level. This way you could just eyeball if something unusual happened in the last week or if there's a trend. So far, we're on February 14th. This is today. We see 748 stocks are trading higher in the pre-market, 195 stocks trading lower. We have 190 million shares trading on up volume versus 45 million on down volume. And if we convert that volume to dollar value, we have $4.7 billion worth of stock trading higher, $373 million worth of stock trading lower. So from that perspective, it looks like trading in a pre-market hour has a bullish lean. Now, let's come down and look at it from a couple more perspectives. And when I scroll down a little bit towards the middle of the page, now we have a list of stock symbols with the prices and the pre-market, the change in the pre-market from the previous day, the volume, and alerts. The list is split up into the most active stocks, the biggest percentage gainers in the pre-market, and biggest percentage decliners. Here I have 197 stocks on this list that made our biggest percentage gainers list, 43 on our largest decliners. So that also points to a more positive outlook in the pre-market trading. Now, a couple notes about this list. To make this list, we do set thresholds for liquidity, price moves, volume, because, because stocks trading in pre-market hours will tend to trade with less liquidity, lower volume. And if that stock is traded on a major US exchange and meets our thresholds, it could make this list. And that includes low cap stocks. We could see here market caps, low caps. It could include an ETF, a leverage product, could be an inverse ETF, preferred stock. So to narrow this list down further to a smaller group, we could use the filters above. Now, some of you create a watch list, and if you have create a watch list and you want to filter this particular report by your watch list, you could drop down, you could use this filter, drop it down, select, your saved watch list, and this will filter by the stocks in your watch list. In our example, we're going to use this filter in ETF. I'm going to click on it. You see a drop-down menu of different ETFs to choose from. And when we select one, let's do SPY. The report will get filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. So here we see that there are 22 stocks that made our biggest percentage gainers list. Again, that meet our thresholds, and 6 on our decliners. That also points to a bias towards the bullish side in the pre-market trading. All right. And some of these, E's, those are telling us that their earnings, these companies' symbols reported earnings when you hover over it, and the N is the news. So if you hover over it, you'll get the headline news. Will, I did give it a couple minutes, so I'm going to stop here to take questions if you have some.
We did have a question from one of our longtime chameleons from Florida. He was asking, and it came yesterday, I guess, some of the spreads that showed up when you were touching on what we were going to talk about yesterday.
Okay.
Explaining Christmas tree put was the question. Yesterday on the search, it popped up Christmas tree put, jelly roll.
So I'm going to default to SPY, and let's come back to the multi-leg trade. So this is the newest tool that we pushed out. It's only 1 day old. We do have bugs in there that we're fixing, because as soon as we publish it, there are users out there, hitting on it and using it in ways that we haven't tested yet. That's not unusual. So they report bugs, we're fixing it. And because we had to fix some bugs, we had to reload it. So right now we're still reloading, I think, like yesterday's data, and then today will start to, once it catches up, it'll populate today's data. So I'm going to come back here because I believe that you probably saw that strategy detected in this report for some stock. Okay. And a recap, if you guys didn't see the webinar yesterday, if you didn't catch it, what this is doing is looking through the options trades, the time and sales. Okay. And the software is taking all the trades that are happening and then looking through the trades that were designated multi-legs, connecting them and saying, this is what we interpret the strategy was behind this trade. Okay, and then it creates this report. So this report itself is our proprietary report. This isn't a report that that is delivered to us from the exchange or anything like that. We're analyzing the data, and based on the data, this is what we believe is happening, right? Because when something trades on the exchange, it's not designated as a put spread. Just tell you this and this put traded. That they're both multi-leg, so we have to interpret it. Okay, then that must be a put spread. And then we collect that data, and we organize it here. So from the top level right now, it's yesterday's date, Feb 13th. Like again, I told you we're fixing bugs, so we might have to reset this as we're fixing these bugs because they're coming in. And so far in SPY, it detected that there were 69 different strategies that we detected using multi-leg trades. Okay, which means not 69 different put spreads, because a put spread's one strategy, but 69 different strategies. A put spread and a call spread are two different strategies. A butterfly and a put spread are two different strategies. So 69 different strategies. And if we click on this filter, it lists all the strategies that we detected. Okay, this is the software detecting. Okay, this is what the software said. Okay, here's this spread, and it detected this is most likely this is the strategy. All right, so it gives it a name, an interpretation. And we talked about it yesterday. We could be wrong in the interpretation, right? We could be wrong, but it's the most likely strategy that happens. So if you see two puts trade in the same month at the same time, two different strikes, the most likely thing is it was a put spread, right? Buying one, selling one, because it's not common to simultaneously buy two put spreads on two different strikes. Okay, for example. So it lists all the strategies, and then when you click on it, you could get the details of it. And as we could see, some of them are common, put spread and call spread. These traded the most yesterday, right? This is sorted right now by volume. So you could click on these, but sorted by volume. So put spreads had the most volume, most contracts. Out of the put spreads, there are 2,000 unique put spreads. Okay, that means if I click on it, right? If I click on it, you could see here, I could expand this. Let's just say, you could tab through here. These are all different put spreads. So you could see April 19th, 470.74. And then you got Feb 16th, 470.480. All, unique combinations. So there's a lot of 2,000 different unique combinations that we detected, right? The top one, April 19th, 474 put spread, traded multiple times. It traded a total of 5 times yesterday I clicked on it, so it's going to the details. 89,000 contracts traded in total, and it traded 5 separate times between the times 9:32 and 10:24. Okay, so here are the put spread. When I'm coming, these are the time and sales. You could see 9:32. It traded for 52 cents. This was the market 51.57. 9:32.36. It traded again 22,500 for 53 cents. And if you want to get the details, you click on that, and it shows you these are the time and sales. So I'm going to close this. So and I'm just going to review this because I was getting questions as well from emails, people who didn't see the webinar. So they hit upon this tool, if you found it. So I'm going over the questions. Another question was, and then I'll get to the Christmas tree. So another question was, what does this H6 represent? H1, H6. We also added indicators to it. So the N, where you see the N, what this means is that this looks to us like a new position given the open interest. So if you open this up, let me open this up. Here's the current market, 52.58. And so this one yesterday, right? I think this might be today's open interest. Looked to us like a new position was being established. Now, I'm going to close this. This H6 says that we also keep a record of the spreads in the most recent history. Okay, and we're going to be expanding that. So in our history, we detected that this spread, the February 16th, 470, 480 put spread. Traded 6 different days historically. Besides today, if we go back in time, we see 6 different days. Okay, so if we click on it, open it up, you see the historical 6. So this is today's trade. This is yesterday's. You see the 40,000 over here, traded and so forth. So I click on the historical, and here we see, February 12th, 9th, February 6th, 8th, 7th, and 5th. All right. And a lot of these were small, a 2 lot, 4, 44. So this could be just SPY is a busy product. There's a lot of different players, and different people came up with this combination, right? That's possible because there's a lot of trading in SPY, and that's what it looks like. That maybe there are different people. Here's a 10,000 contracts traded. Is it related? I'm not sure. But it did trade on February 5th, and we could see the details here that the VWAP price traded for 43 cents. These are the last. It was 37 cents. The last price it traded as low as 31 cents, as high as 45, and you could see that the VWAP price, the volume weighted average price, was 43. Okay, so most of the volume was closer to the high of the range. Okay, and this was the VWAP bid and offer. So what this is telling us is that mostly it traded in between the markets. Okay, so we're building up the historical link to this trade if there's anything significant to this. Okay, and you could see that from 43 cents, as time went on, this spread traded as low as 8 cents. This is where the stop went from 493 went up to 498. So the put spread lost value. Trade as low as 8 cents here. And then the stock climbed up to 502, traded for 3 cents. And yesterday, the stock dropped from 502, 494.52, traded for 10 cents. Okay. So by clicking that, I brought back the list. So those are some of the details of this report. All right, that it's organizing it in a way that we're looking at raw data and trying to make sense of the raw data. How's it connected? What's going on? Now coming back to this, we could open it up, and yeah, it's interesting because there are people using options for different types of strategies. Right? Like we said, 62 different types of strategies were used yesterday that we detected. And if we don't know what if it can't decide, it'll just put it here as a combo spread. So combo spread would be oops. Hold on a sec. So that might be another bug here. Let me just see. All right, so that's, again, I'll make a note of that. So if the system doesn't recognize it as like a strategy that exists and is written about somewhere, they'll put it in here. I think what the question was, a Christmas tree butterfly, right?
That was the question, yeah.
Okay. So typically a butterfly looks like, and this is a call butterfly. A butterfly will look like, a call. You do a lower strike, middle strike, higher strike, right? 3 strikes, equal distance, right? And the ratio is 1 lower, 2 middle, 1 higher. That's the traditional butterfly, right? So you have a call, with the strike prices more like equal distance. This one looks like a skip strike to me, actually. So let me see. Yeah, this is actually a skip strike. So I think this was just too long. We didn't put it in there. Hold on. Yeah, so again, I'd have to look through that, see that's also a bug. So what is happening here is that they changed up the ratio. Instead of doing 1/2/1, they did, okay, what we're going to do is we're going to keep this as 1. We're going to change the middle. Instead of 2 options, we're going to make 3. All right, so let's just say you're buying 1, and instead of selling 2 of these, you're going to sell 3. Well, if you're doing that and you want to hedge off your upside, right, then you have to, instead of buying 1 at the top, you're buying 2. In other words, you're still you're selling 3 options and buying 3 options. So you're buying 1 at the bottom, 2 at the top, and selling 3 in the middle. So the number of options you're buying and you're selling are still equal, but you changed up the ratio. So instead of 1/2/1, right, you're doing 1/3/2 in this scenario. Okay, so that makes the graph look a little bit different. In addition to that, what it looks like to me, and I'm going to make a note of it. I think that it didn't fit in here because the name is too long, so I have to make a note of it. But this one is actually a Christmas tree because the ratio is different. But in addition to it, it's skipping a strike. So what does it mean, skipping a strike? The butterfly is usually the distance between the lower strike and the middle strike is the same as the middle strike and the higher strike, right? So this distance here is 2, 491, 430, 493. So you can see that's the distance is 2. And then, but you could see here from 493, 494, the spread is 1. See, 2/1. The spread 2 and 1, not 2 and 2. So they skip the strike. Okay. So we could plot that, and that's the next version of this. So the next version upgrade to this tool will be that you could launch it and it will plot it for you on the options chain. All right. So let me just but let's do it ourselves now because it's not gonna. Oops. Hold on a second. Let's do a MarketChameleon. So what we're gonna do is take, where was this? Whoa, let me see. This one, right? Oh, all right. I just lost it because I think we had to reset. So again, we're fixing bugs as they're getting reported, and I think what's happening is, okay, it reset. Let me see. All right. So it was Feb 16th, 491, 493, 494. Okay. So let's go to SPY. I'm going to plot that in. This is a great way to learn, by the way, trading, right? This is a great way just to learn.
AD?
Yeah.
We had a quick question from Andrew. He's in a multi-leg tab, which is or trade, which is being explained. Yeah. How do you know whether it's a debit spread or a credit spread?
So this doesn't, the way this is looking at it right now is it doesn't try to interpret if it was a debit or it's looking at the trade itself, right? So there's going to be a buyer and a seller. So it's just saying, okay, this is the trade that occurred. You could try to infer it from what the markets were at the time that it traded if somebody was trying to come in to buy it or to sell it. So that would be, let's say, so here are the markets, if it traded 53 cents, but the market was 51.57. It's right in between. Who knows? This one looks like it traded at 10 cents. The market was 8 cents, 10 cents. So it looks like somebody may have bought it, like a debit spread on the offer. So you could here it's traded at 119. The market was 117, 119. Maybe somebody bought it. But this is right now just pointing out the trade itself. Like just to get to this part, keep in mind this is not delivered to you. You know,
there's no exchange publishing this information.
There's no exchange.
Literally, this is
proprietary. That's it.
This is Market Chameleon's, whatever you want to refer to it as, algorithm AI that Dimitri has created the programmers to actually, you know, set up this information and figure it out, basically. Yeah. And constantly, the Market Chameleon AI or Dimitri's AI brain is figuring this out all the time. And
right. This is not something like, that you're getting from the exchange or your broker or whatever. They may attempt to create this tool, but they'd have to create the tool itself, right?
Chameleon patent pending, by the way.
Yeah. This is not something like, okay, here's a spread that traded. Is it just to get to this part, you know, keep in mind that this is running through software. This is saying like, and it'll show you the evidence, right? If you open it up, they'll say, well, why do you think that is? Well, here's the trade. So here are the details, and it'll show you the supporting evidence of how we keep track of the supporting evidence. Okay, so that's the trade. And you could see here the quantities. But let's come really quickly. We have 3 minutes. 491, 493, 494, right? February 16th. So let's say it was the 491, right? I'm just going to plot it from one side, right? You have to choose a side. I'll just do it from this side. 493, right? So buy one, sell this, and 494. So these are the three legs. Okay. So the interpretation is it's either buy, sell, buy, or sell, buy, sell. Okay. So, but just for the demonstration, let's just use this buy, sell, buy. We could always reverse it. And now we know, what did he do? 3 of these and 2 of these. So this is the ratio. Oops, sorry. 1 by 3 by 2. So let's calculate it to see what it looks like at expiration. So this is what this looks like at expiration. Now, I didn't input the prices he did it at. These are the market prices. We can, but I don't have that much time. We have a minute. But I just wanted to show you that if this was the spread for one side of the spread, right, then the sweet spot is 493. Right, that's kind of like the sweet spot, and this is the area that the green area is the range it has to close in for this to be profitable. The red is not profitable. So, you know, what are you doing? You're risking 24 cents in this case. You know, I don't remember what he paid for it. Let's say 13 cents, right? But potentially it gets to 493. You could see that, you know, it's 10 times what you're risking if you hit it right on that, right on the nose. But you do have some, you know, range here, small range, that it could still be profitable. So that is now let's, what does a traditional one look like? Well, the traditional one would be equal distance. So this would be 495. To make it $2, oops, 495. So 491, 493, 495. They're $2 apart. And this would be 2, and this would be 1. So that would be a call butterfly. This would be the call butterfly if we didn't modify it to that Christmas tree skip strike. Okay. So we're right up at 9:30. I mean, it's good questions. It's a good exercise to go through it. Especially many of you may have not even been exposed to these types of strategies or even know that these types of strategies are being used, right? Or how other people are using these strategies. So I think it's a great way to learn. Like even for me, knowing like about these strategies and hearing them, being on the floor, seeing these strategies, I'm actually seeing like, oh wow, like this is a new type of way that people are using, that I haven't seen before traditionally. So hopefully everyone, this was helpful. Thanks for joining. We'll continue tomorrow.
Yeah, and more to come with this product. It's a great new product. Awesome job, Dima. Thanks for all the questions, chameleons.
Yep.
Have a great day.
Thanks, everyone. Stay safe